Polygon has been keeping my portfolio afloat single-handedly almost. We have seen some downward action in more recent days. I have the 2-hour chart up at this moment. So this is our close-up view. And if you'd like to follow along with any of my charts, I do have a link to my charts posted below in the description. So be sure to check that out. We had a pretty ferocious pullback along with the pullbacks we've seen in Bitcoin and Ethereum. If you recall, we had a big spike down on December 3rd. Polygon made higher highs, and then we've pulled back pretty sharply. At the same time, our purple pattern still remains primary, and that purple pattern was calling for having set up a larger degree wave 1, followed by a nested 1-2, and then possibly another nested 1-2 after that. It does look a little disproportionately large, some of these nested wave 1s. They do look better on the log chart, which we're going to be looking at momentarily. But as of now, nothing has been validated for the purple pattern. At the same time, there is a red bearish pattern looming, which sees this entire thing as basically a corrective fake out rally. And the reason I say that is that we could easily interpret this as an A wave up, B wave correction down, and this thing has the shape of an ending diagonal. We can see that we have a 1, 2, 3, 4, 5 potentially. So that could be the top of our larger B wave. And when you have a diagonal pattern, especially an ending diagonal, it's usually a sign of a sharp reversal to come. So we could break all the way down and crash pretty hard in Polygon. If that is the case, we would have more of a warning shot probably. So this could be the first leg of a larger wave 2 down. Maybe this is the A wave. We're in the middle of a B wave bounce now, and there might be a C wave to take us down. However, until we see some more downward action here and across other altcoins, I'm not too worried about that at this moment. The hard support there will be the $1 mark, and that'll also show on the logarithmic chart. For any immediate bullishness, we want to hold the 144. That would be my support for the primary purple pattern. That's primary. Now I've added a third pattern on here, which is basically another alternate. So it's still a bullish alternate pattern, but it would call for this entire rally having been a leading diagonal. So we could count it this way. We could count this as a 1, 2, 3, 4, 5, and each of the subwaves within it would be corrective zigzags, especially this last wave. And in that case, maybe we've already peaked and we're going to have a bit more of a pullback. It really depends on how the pullback goes. That's why I've written here. So we can't break our support of $1, obviously, but if we have a leading diagonal, you would expect a pretty deep retrace. So a 61.8 to 76.4% retrace would be normal. So that would be entirely possible that we're in a B wave bounce now. We have one more pullback here to finish off the leading diagonal. The reason it's bullish is because that means our first wave is much higher than we otherwise would have calculated. So we're going to look at that in a second on the other page. But right now, nothing's particularly bullish, but there's a very diagonal feel to what we're doing, what Polygon is doing right now. And that is why I have the trend lines drawn as shown. Now, the big picture, as always, the log chart does look a bit more clear. Our purple pattern was calling for our blow-off top in May of 2021 as having been the top of a larger first wave. You can just see how it looks like a total rocket launch from around 2020, the big market crash of 2020, all the way into May of 2021. And I identified our pullback as a wave 2 because of the depth of it, because we already had a very complete looking 5-wave impulse from the March 2020 bottom to where we are now, and various other fib confluences. So this is why I'm calling this a wave 2. And we've been rallying since that point. Our red pattern, of course, sees this entire thing as a B wave. It's very similar to the red patterns we have in some of the other cryptocurrencies, such as Bitcoin, Ethereum, as well as some of the altcoins. I think what was a Chainlink, some of the others, they have the potential for hitting a larger B wave top before pulling back. So I'm not going to take this off the map yet because it's still technically possible. Here you can see how this does look more corrective. You have a A wave up, B wave down, and then we may have an ending diagonal of the C wave. Here it really looks like we have more rallying before we're ready to pull back. And zoom up just a little bit. So we would expect one more wave up and then potential C wave crash. Now, if we have that C wave crash, yes, there's a chance we could fall straight down. It could be a disaster, but typically you would have a 5-wave impulse down. It would be the first wave of your C wave and a corrective bounce up before the ultimate crash. So until I see something like that, this is not something I'm going to worry about too much. I already mentioned support. 144 would be your support. And we have that alternate blue pattern, which, well, it would be very hard to distinguish for a while how different the blue pattern would look from the red pattern. What I'm getting at is that whichever one we top in, you're not going to really know what's happening till we're in the wave 2 pullback. So like I said, if you see 5 waves down, very good chance we're going to have the red C wave down. If it's more of a corrective kind of bounce situation, you have like an A wave down, a B wave, and a 3 wave down, very likely we're just following this larger leading diagonal blue pattern. So as of yet, it's really hard to tell what's going on. One thing to note with leading or ending diagonals is you often have a breakover. So your 5th wave top within this diagonal will often break a little bit over the upper trend line. And you could say a lot of things. It's exhausting the bullish sentiment. It's preparing for a crash. It's a squeeze, whatever you want to call it. And that's usually what sets up a big crash after a diagonal. So just mentioning that to keep it in mind. But until we see more action, the purple is primary. And as I mentioned here, this purple pattern looks a lot better. You can clearly see a larger degree 1-2 and then a smaller degree 1-2. And we are presumably in the 3rd wave. Although this latest pullback does make me question the potential of this a little bit. You wouldn't expect to see diagonals for your 3rd waves. So who knows what's going on? It very well may be a lower degree 1-2. Not completely sure. If this does hold together, our 3rd wave target is still sitting where it had been before, between 46 and 650, 635. Those are your standard Fibonacci extension targets for the 3rd wave. And after 4th wave consolidation, our 1st wave standard targets would fall between 749 and 978, but there are, of course, many Fibonacci confluences up overhead. There's one at the 1285 mark, 0.5 extension of this larger pattern, as well as 2631, which is the 0.618 extension of this larger pattern. So there you have it with Polygon. Things are looking pretty good. We got to keep an eye on this. So if I see anything developing that looks bearish, I'm definitely going to put some updates on it. We'll see how the sentiment correlates with some of the other cryptos. Polygon is one of the ones that just doesn't seem to be correlating, which has been a good thing for us in this crypto, but you never know if that's going to change. So don't forget to subscribe to my channel. And if you enjoyed my video, please give me a like. Until next time, thank you for watching and happy trading.